So this is a very good point that the halving events are programmed in to happen about every 4 years, right? You might have a slight, a couple of hours of difference from when people project it and stuff, depending on how quick blocks are being produced on the Bitcoin blockchain. But when you get to a certain block height or some time period from when the halving event happens, it's generally about 4 years, the new Bitcoin being issued on the market drops in half, right? So for example, just for pure simplicity's sake, if the block reward in this case was 10 Bitcoin per block, it would drop down to 5 Bitcoin per block that miners get rewarded. And that basically, effectively speaking, reduces the amount of new supply on the market that can be sold, because miners usually are running in a business format. They mine Bitcoin, they have an underlying cost to do so, and they sell the Bitcoin in order to fund their mining operations. It's not always true. Some people hold the Bitcoin and finance their expenses elsewhere. But this is generally what causes these major breakouts here in price. It's a big effect in this case towards helping to basically bring prices higher. So I understand the point that the individual brought up in this case. One of the things I would like to say is kind of a, not per se a devil's advocate or just kind of challenge, is that these halving events overall, they will start to have less and less impact in the sense of Bitcoin weight. So that's one thing to consider. But outside of that, I just generally think that we're going to have less severe bear markets and also less severe rallies. So what you can see, no matter if you use the 4-year cycle, or you use expanding cycles, you can generally see here that the momentum of Bitcoin as an asset, albeit it's still for, I think, a very long time going to outpace any other asset class on a general annualized basis, right? Some years it might be down, but generally speaking, Bitcoin, if you take this kind of midpoint line here, right, Bitcoin's chart, you can see here that even as the momentum is still great, as we're looking at the logarithmic chart, the momentum is slowing, right? And we could see that again when we did the expanding cycles, right? This one here was a nearly 50,000% return. Here to here, we had around the same kind of percentage return here. But as we look at the last cycle, we had dramatically lower percentage return, right? So again, important thing here to note is that we're seeing a decline in returns over time, and that's given in any market. Bitcoin as an asset class probably, isn't going to go towards $100 trillion market cap in this cycle and the next cycle, maybe 3 or 4 cycles out if it really becomes this major store of value, right? And if there's high levels of inflation. So generally the returns of any market are going to decay over time. And what I think you're going to get as the cycles potentially are expanding, right, is you're going to get, as I mentioned, less severe bear markets. So we could just, for example, again, don't take this at face value, right? So we maybe continue to climb here, and we set in our new highs here in this case, roughly speaking, from bottom to top around, let me get it here drawn on the chart. We're for 2022. Make sure, let me move my zoom thing. I was trying to make sure I don't have the thing too far off. There we go. So let's say we go to 200K. Right. And then what we're going to have probably as we move along this line, we enter into a bear market, prices start to go down, right? Start to cool off and enter into a bear market for Bitcoin, right? The idea here, though, is that no matter when those halving events happen, whether they're earlier or later, they're going to start to change the supply schedule. And we're going to generally be getting, in this case, longer cycles, right? But outside of this, well, cycles that have weaker bear markets and weaker rallies. So that volatility nature of crypto is going to start to decay. But anyways, I hope that can make sense. It's kind of hard to visualize because we really can't see it until it plays out. But overall, as we've talked about, we just thought about it. We just actually got featured in an article on Cointelegraph that you guys can find on our Twitter page, where I talked about how people always, people are challenging Bitcoin's narrative as a store of value, which to me, it's a bit crazy, but I think it comes from this one misconception, which is that people see, well, the halving event just launched today. Isn't Bitcoin's price just going to immediately go up? And that's not usually the case. The reason why is because it takes not only time for that supply adjustment, even though it hits the market immediately, it takes some time to really have a long lasting effect on Bitcoin to kick off that initial cycle, to have that supply reduction day by day by day by day after it goes into effect. And then also, as prices appreciate, it's really going to be dependent on whether or not buyers are coming into the market. Are more people buying Bitcoin than selling Bitcoin? That will generally determine the direction of price. So again, I know I'm rambling on a little bit here, but one of the key points here to keep in mind when it comes to Bitcoin as an asset is that overall the returns are going to decay over time. And I think the halving, in this case, the reduction of new Bitcoin hitting the market comparative to the overall supply, is going to be more and more minimal. So hopefully that makes good sense in this case. We're already at pretty low inflation levels for Bitcoin. Reducing and introducing the new halving event isn't going to cause the same supply shock it did back here or back here or back here. So hopefully that makes sense.
Awesome. Yeah, he actually just messaged in and said, thank you for the answer. Agree that the volatility will decline in the future will answer the argument of lengthening versus more strict 4-year cycle driven by supply and demand.
Exactly. Yeah. And just to close on that, I appreciate the kind remarks. It's going to be interesting to see how things play out. We'll see.